Today's video is a deep dive into how Bitcoin can act as a hedge against inflation, an increasingly important consideration as digital currencies become more embedded in our financial systems. We'll explore the unique properties of Bitcoin that make it suitable for protecting your wealth against the eroding effects of inflation. Let's get started. Bitcoin versus traditional money. Traditional currencies, also known as fiat currencies, are regulated by national governments and central banks. These entities can exert influence on the economy by printing more money, thereby potentially decreasing the value of money through inflation. Historical examples abound, such as the hyperinflation in the Weimar Republic in the early 20th century, and more recent cases like Zimbabwe and Venezuela, where excessive money printing led to a collapse in currency value. Bitcoin offers a stark contrast. It is a decentralized digital currency that operates on technology known as the blockchain. This not only ensures security and transparency, but also enforces a finite supply of the coins. Bitcoin's features that combat inflation. Limited supply. The supply of Bitcoin is capped at 21 million coins. This limit is hard-coded into the Bitcoin protocol and cannot be changed. It mimics the scarcity and stability of precious metals like gold, but in a digital format. The significance of this feature cannot be overstated, as it provides Bitcoin with a deflationary characteristic, inherently resistant to inflation. Decentralization. Unlike fiat currencies, Bitcoin is not controlled by any central authority. Its network is maintained by a community of miners and nodes distributed globally. This decentralized nature of Bitcoin reduces its susceptibility to poor government policy decisions, corruption, or failure in any single economy or political system. Global nature. Bitcoin's utility transcends borders. It can be used and exchanged worldwide without the need for currency exchanges or government intervention. During the Greek financial crisis in 2015, many turned to Bitcoin to bypass capital controls and preserve their savings, showcasing Bitcoin's effectiveness as a global safe haven. Historical performance and adoption trends. Despite its volatility, Bitcoin's overall trajectory has been upward. The recent pandemic saw a major shift towards digital currencies as traditional financial systems grappled with uncertainty. Bitcoin's price surged as it became viewed not just as a speculative asset, but also as a store of value. Noteworthy investments from companies such as MicroStrategy, which adopted Bitcoin as a primary treasury reserve asset, underscore its growing acceptance. Specific examples of Bitcoin use in inflation-hit economies. Turkey. Amidst ongoing inflation issues and currency devaluation, Turkish citizens have increasingly turned to Bitcoin as a means to preserve wealth and engage in transactions outside the purview of a fluctuating national currency. Zimbabwe. Following unprecedented hyperinflation, trust in traditional banking significantly waned in Zimbabwe. Bitcoin and other cryptocurrencies have been adopted by a growing number of Zimbabweans as alternatives to the beleaguered Zimbabwe dollar. Nigeria. Nigeria has seen a surge in Bitcoin adoption, driven by high inflation rates and a young tech-savvy population. The decentralized nature of Bitcoin provides Nigerians with an alternative to the highly regulated traditional financial sector. Advantages over traditional safe havens. Bitcoin is highly portable, divisible, and can be used for both large and small transactions, offering significant advantages over physical assets like gold or real estate. The ability to send and receive Bitcoin anywhere in the world at low costs and without the need for third-party intervention makes it an excellent tool for wealth preservation in an age where digital transactions are becoming the norm. Potential risks and considerations. Investing in Bitcoin is not without risks. The price of Bitcoin can be extremely volatile, and while it can provide significant returns, it can also result in substantial losses. Regulatory changes or actions in major economies could impact the adoption and use of Bitcoin. Final thoughts. Bitcoin's limited supply, decentralization, and global acceptance position it as an effective hedge against inflation. As we move towards a more digitized economy, Bitcoin and other cryptocurrencies offer innovative opportunities for preserving wealth. Thank you for watching, and please subscribe if you want to stay updated on the latest trends in cryptocurrency and how they can impact your financial planning.